OMG, this market is on one. What a weird day. I think this is the biggest earnings day of the year. Blowout earnings, kind of expected. Market gaps way up, rolls back over, flies back up to all-time highs. Insane market price action. So in today's video, we're going to be going over the indices, 30-minute time frames, and the daily on a couple of them too as well. We're going to go over some stock market indicators, and in the conclusion section, I'm going to bring out big picture context charts just to give you an idea as to why we might be seeing price action like this in the first place and just give you good context. Now, before we hop into today's episode, I just want to say a thank you to all the active viewers that are out there and subscribers and people that engage in my content, smashing that thumbs up like in just the last 48 hours. We've had 33,000 viewers, so on average around 10,000 daily viewers on the daily stock market brief show. So thank you so much. And then not to mention, obviously, my active patrons, Patreons. I can't even pronounce it. I just started a Patreon, and we have 176 members now from multiple different tiers that I chose from. Many of them are on the $9 tier, where I give them daily trade ideas if there are some available. So after this movie is up, I'm gonna go post that there for those Patreons. So thank you so much. Just parted ways with my job, my career that I've been with for the last 11 years. So this really does help out. Thank you so much. Let's go ahead and hop into today's episode. All right, everybody, welcome back to the Daily Stock Market Brief Show. We're looking at the market dashboard right now. Got some interesting charts here. First off, let's just call out a couple of things, okay? We're gonna look at the top three. Communication services, financial, energy. Okay, leading the way here. Is this a trend change? Maybe this is just one day, right? Things ebb and flow. Overall, markets up green. So nice day overall for the markets. We all know that it was very, very choppy. If you follow me on Twitter, I do sometimes an intraday alerts, and I did throw a couple alerts out there based off of 30-minute time frames. So if you got to see that, congratulations. It ended up playing out fairly well from my point of view. I want to dig in more here on these three sectors. So first off, financials. Now, we've been talking about financials these last 3 or 4 days. You may remember this chart, the BKX. We talked about this symmetrical triangle, and we said it looked like it was breaking out. We have a target right over here around 126, and it continues to crank higher. Okay, so this keeps on pushing and pushing. Now, this looks good for financials. Okay, the BKX chart tracks like the largest 24 institutions, so it's a big one to watch. This one and also the KRE, the regional banks. But here's where it gets interesting to me. So we're coming to the end of April, and we're heading into May. Everyone knows the saying, sell in May, go away, or whatever. But from a relative performance standpoint, RRG Research, Julius DeKemper, he uses those relative rotation graphs that everyone likes so much that I post on here and I go over. But he posted this recent article, and I pulled it up. You may not have access to this kind of an article, but I do, so I'll just share a piece of it. But what I want to point out here is the financials. He mentioned that May, June, July, the financials typically outperform the SPY only 35% of the time, which is a laggard. Okay, so it doesn't mean that it can't go high, higher, the financials, but what this is showing us is May, June, July. It says May, the financial sectors outperforms the S&P 500, the SPY, right? The broad market index, only 35% of the time. So basically what that's telling me is, hey, you're rolling the dice here. 65% of the time, the SPY is going to outperform the XLF. So then I got to thinking, okay. So financials might be taking a breather, or they're just gonna, because they've already been a monster run up. Okay, what's the highest performing in May, June, July? And then you see XLC, communications. Okay, 75% of the time, the communications sector, XLC, outperforms the S&P 500. Okay. That's pretty interesting. We see XLB, which we've been talking about, XLB and XLI. So that's also something interesting that I wanted to call out. This one looks like it does not perform nearly as well. Now, what I want to call out here is the XLC being the top performer, it overperforms the S&P 500. So when I pull up today's performance we're coming into the end of the month, we see XLC taking 2.77% change. Now this could be because of obviously earnings, we know that, so this could be a big fake out, but it is something to just kind of monitor going into the end of the week. And like I said in the conclusion section, I'm going to talk about overall context. Now, this does not mean, okay, what this does not mean, this does not mean that these can't all go down in May, right? You can have communication still outperform the SPY and lose profits, right? This is relative. So 75% of the time it outperforms the SPY, even if the SPY drops and the XLC drops, but the XLC drops less than the SPY, you can still fall within that, stronger performance. So it's just something that I wanted to call out. Nothing too alarming, but what I do want to also point out here with financials is yields. The 10-year kind of looks like it's flagging. And this is just a line chart, but you can pull up the candle chart too as well, and it looks like it's flagging, kind of breaking out here. We see an uptick right here in the 10-year yield, and these kind of moves are good for banks. So if we continue to push a little bit higher or kind of consolidate, that could add more, just more energy to the banking sector. An interesting takeaway was Canadian banks are seeing some really strong performance. So, if you want to dive into that, maybe look up some Canadian bank stocks and see if you have any some good stuff there. The next one I want to show is the dollar. The dollar is pushing lower and lower. I feel like it's due for some sort of bounce here soon, but this thing is just lower high after lower high, just pushing lower and lower. Meanwhile, oil is going higher and higher here. We just broke out of that 64, had a daily close that looks pretty strong to me in strong context. If we can hold up in this range and this isn't a fake out, I think the energy sector is going to continue to see some strength, which is a good thing for anybody that has been kind of following this channel. We've been talking about energy stocks coming back and the energy sector making a comeback after this big period of consolidation that it's been in. Now let's hop into some indices really quick. First off, daily time frame for the S&P 500, we still have that negative divergence building. This resistance line right up here is still holding. The real big only call out that I want to do here is hanging man candle. However, it's in bullish context. So take it for what it is. Hanging man, all-time high. Hanging mans are reversal type candles, but they need confirmation to the downside. But even if we fall down to 41.50, that's not even below the 20-day moving average. So you're still in really strong bullish context. This right here, to me, as we're running into resistance, not the greatest looking candle, negative divergence, bearish crossover. It's like, it's understand that if you just take a T chart or whatever it's called, the T chart, and you write, bulls, ideals for the bulls and ideals for the bears, the context is for the bulls, the price action, right? So the context meaning the simple moving averages, and then the price action too is flagging, all-time high. That's all for the bull section. And then I understand from the bears section, you have negative divergences, slowing momentum, a lot of gaps that are structurally just not sound, pressing the market higher and higher. Also from the bull section, I guess you have Powell's never thinking about raising interest rates too as well. So it's pretty darn even, but more weighted to the bulls section just based off of this price action and volume here. So we'll continue to monitor the developments on the 15-minute time frame. I want to call out a couple of things that we've been talking about, right? We gapped up. We did mention that just be careful if we get a big gap up because you might get selling on strength. And that's exactly what took place today. If you look at the chart of Apple, like a horrible looking daily candle, right? It gapped up and is just crushing red. And it looked very similar to AMD the other day. AMD did the same exact thing. This could be a good buy entry, to be honest. It's very hard to determine because it is still within some support area. So you might be able to get in, luckily from a pullback, but the context of the candle on the Apple, it's just not that great looking. But I want to call out here on this chart, the VIX closed the gap above us, closed the gap below us. So immediately as it came and filled this gap, what do you know? A long entry. So this is where I posted on Twitter as I started seeing the 30-minute time frames just kind of stick within or pull back to areas of support. I saw the S&P 500 closing this gap, this area on the VIX, and it started heading back lower. From a daily perspective on the Dow Jones daily candle, it held at the 20-day moving average. Pretty strong looking candle with some supporting volume. One thing that I want to note is 3 days of progressing volume too, which is kind of interesting. And it's been holding at this area of support. So this could send the Dow Jones to new highs. in my opinion. So we'll continue to monitor that. And then from a 30-minute perspective, look at this. I mean, the bears have been making progress, okay? High, lower high right now, but support has been holding. So I would say wait for confirmation, because we can very well get a gap down tomorrow and head lower. That's a possibility. Or we might get a gap up and then come back and then maybe test this as support and then bounce from that area. So we'll continue to monitor this, see how this develops. But I think if we start getting back above 341, we can easily go take out 343 and potentially just reach out to all-time highs, continuing this crazy momentum that we see on some of these indices. As far as the Qs go, big chop fest. We had that gap up, right? Completely fell down, V recovery, but we still have resistance at around 342, support around 334. And then the IWM finally came back and back tested it. This was around the time when I posted, but we had resistance, came up, right? We got that big gap up, came right back down, and we bounced from that area, that zone of support. We are still right below the 50-day moving average, so just be cautious of that. This does not mean, when I posted that on Twitter, I also had to emphasize, like, this is what I meant for an intraday trade. I didn't mean to hold this, overnight, because we never know what can happen. But also, if you hold it overnight, it could still continue to move up, obviously, or bounce around more. But keep in mind, there's a possibility for a dead cat bounce. So if we get below this 226, we can go easily test that 200-day moving average right around 224 to 225. So just be on the lookout for that. But as it stands right now, support is still holding. Now let's look at a couple indicators. I've been talking about the narrowing range. And I was wondering, no one was talking about it, but then randomly on Twitter, one of the people that I follow, Stretching Spreads, he's amazing. But I saw that he liked this post, and it was a chart of just showing the contraction of the Bollinger Bands, and I was like, wait, what is that? Somebody else is talking about it. So that was really cool to actually see some other people starting to mention just how tight these Bollinger Bands are contracting right now. We went from 17 yesterday to now 14.58 as far as the Bollinger Band width goes. And today you saw that little spike in volatility, but still, even with that little spike, the Bollinger Bands continue to contract. So keep in mind, it is still very, very, very narrow. Negative divergence still building on breadth. So this is the Nysee-McClellan oscillator. I don't know what's going on here, if we're going to see some big breadth come in or if it's going to take a decline, but nothing's overextended. And this is just, as we're making all-time highs, and this thing just kind of just continues to diverge. Another one that I want to call out is the Nysee High-Low Index. Continue to press higher here. And you can see here we have a negative divergence as well. That means we have a high here and a lower high, continue to move higher. Same thing over here on the percent of stocks above the 200-day moving average. We had a negative divergence here. Now, I called this out a couple of times, actually. When we're getting to this range and it just drags up here, we saw this channel that it went in, then a negative divergence, and then it fell over. And then we had this channel. As you can see, it was grinding higher and higher. So on a video, I forget when, we talked about the possibility of if it continues to just drag higher and higher, we might see a very similar type blue channel, or just an up channel continue to take place. And that's what we're seeing right now. I just wanted to call out, we do have a subtle divergence here in the works. Not fully, it doesn't mean that it can't break out back to the upside, but just keep in mind that small negative divergence is building. We have the null here, the new high lows, also negative divergence. You can see from a high here to a lower high to a higher high. And just a lot of diverging things taking place. So let's wrap this up into the conclusion section. First off, everything is in bullish context, right? As you can see, things are full bull mode. However, I want to kind of wrap context. So we saw some negative divergences building, right? They haven't been confirmed, so it doesn't mean anything. We see narrowing of the VIX, which typically, when you see this contraction, it could lead to explosive moves in volatility, okay? And then from a monthly perspective, I mean, we're just completely disconnected from the 5 EMA, which is a very frequently tagged moving average, and we're trading above the upper Bollinger Bands, all right? And this is a monthly perspective. I'll talk more into detail on my weekly recap, but just notice, when we get above it, it looks all fine and dandy, but then we get a pretty big move to the downside. When we get above it, we push, and then we get a move to the downside, and we're right there. Doesn't mean we can't press higher and higher, but just be aware. It's just what's the word I could use? It's just overextended. There you go. And that's from a monthly perspective. Here's the S&P 500, same thing, monthly time frame. Just look at, I mean, it's up 6% for the for the month. That's just, I mean, we opened and we went straight up. Crazy, just crazy, crazy, crazy. It's awesome because, you know, this is awesome because anybody that's long right now is loving it, but the people that aren't paying attention to the potential risks are not going to love it if it does do a correction and they capitulate. So, but just notice here, upper Bollinger Band right here, it's extended and we pulled back, right? Here, this one candle, this wolf candle, was a big green candle. Everything was looking good. And then we pulled back. And then we're completely disconnected also from the 5 EMA. So just be mindful of the overall context of this chart. Now, that's all I got for you on today's episode. Hope you have an excellent day. Tomorrow, I will be bringing the weekly recap episode. See you then.